One of the funny things about the stock market is that every time one person buys, another sells, and both of them think they are really astute and can sleep for 16 hours a day, getting up maybe just for food and market openings. But what's the reality? Today we are talking about some investing tips, some things to prevent, and also about some propositions such as trading ideas. So welcome to another episode of Blockrevision. My name is Rafał Leszek and let's begin. And heading to market mover section, discussing latest economic data of especially US at very important as a very important gauge has been just published. So the job market has recently lost some momentum, reflecting this fading effects from the reopening, with also less impulse from fiscal stimulus that was boosting the economy. So after this ADP data that was quite disappointing on Wednesday, where we shown the half of points of what was suggested. Right now we've seen that the optimistic vibe for the job market grow is diminishing. So I can find that non-farm payrolls that was published today is regaining this sentiment in order to in order to find that US economy is getting back slowly to what was before this pre-pandemic levels. Unemployment rate is also getting slowly down, from 5.7 from 5.9 as of recent to 5.4%. It brings us to the levels unseen, to the lowest levels this previous 12 months period. However, when we're looking at the broader perspective, it's still nothing to be really enjoy about. And now heading to economy view. So today we are talking at first about this possible claims of getting hike of interest rates not earlier than 2023. Clarida has spoken to the audience that money markets right now will rather be prepared for the tapering process during 2023 than as it was previously declared by 2022. So right now Clarida noted that later this year it will begin to scale back its bond purchases in case growth stays strong, but right now there are no obvious signs to take such a step. Another bearish voice we can hear from Fed's Kashkari that says Delta could throw wrinkle into the taper plan, and he also added up that if we see a very strong labor market this fall, it will bring us to reducing asset purchases. Otherwise, this action may be stopped. And even with some good economic data where we could find the economy adds back 943,000 payrolls for about 900k expected, what was here as forecasted, and unemployment rate falling to 5.4. We can still find that there is still need for a helping hand. Still we are way above the levels we seen pre-pandemic, so it's still nothing has really changed, and nothing should prompt Fed to change their trajectory. And whatever hard data is speaking to us it still stands in a opposition to what Janet Yellen says. So she finds the US economy to undergo rapid recovery after COVID-19. So he also has added that longer-term issues remain, such as a decline in labor force participation, which she said is why more spending is needed. So why could she find that the US economy is undergoing rapid recovery where there is a still fiscal drip need to be applied? So there's lots of confusion in terms of what is the real message to us as society. On the other side of the fence, however, we have a famous investor and the manager of Oaktree hedge fund that claims that Fed shouldn't hold back out of fear of another taper tantrum, and also adding that institutional investors rely on getting 7% returns every year, whereas during this time when federal funds rate is 0, it's nearly impossible. So Fed is right now under stress, where he has been placed under an attack of both sides, of those who want yield bigger profits and those who want labor markets to recover by all means. But really, how can we get from this, as Howard Marks said, everything bubble without leaving US into a recession? And one of the signs shows us that the economy is really upended right now. Maybe this chart that shows us that wages cannot keep up with inflation. So on the long term, it may result in declining real wage growth and a reduction in demand. So it may slow down inflation for a while. But as of first, we may see a deflation and inflation for a longer horizon. And unluckily for high prices, we may have an event that may spoil the Fed's party, claiming here and there is no problem, no worry about. So this year is definitely one of the toughest when it comes to heavy rains, high winds, flooding that are trying to tie up global trade, as the shipping industry is already overstretched. So we are struggling in terms of recovery in this sector more than ever, and we can find that China typhoons pose latest supply chain threat as ports shut. This time, Yantian port in southern China's export and industrial hub of Shenzhen temporarily stopped drop-off services of containers on Tuesday night due to a typhoon alert. And we can find that the impact of Yantian's closure was unprecedented on the supply chain because it serves one of the world's largest manufacturing bases. Probably it's not something that is really off. There may be worse even to come, as officials predict more typhoons that will hit China this month. So worse may yet to happen. And getting to index outlook, I'd like to make a small recap of what was happening during previous week, and we can find a heat map of stocks that turn out to be winners and losers. Winners are on green and losers are on red. So the biggest surprise of previous week was Amazon, that has underperformed in price, and it was due to the fact that it has shown worse than expectation in terms of earnings data. As of next, laggards were financials, energy stocks, also healthcare. Energy stocks has recently was ongoing a pullback that right now brings us to a little sell-off. The other section is healthcare that also after bigger than usual run up has pulled back right now, and also the lagging industry is aerospace and defense after this Virgin Galactic's sell off. And getting straight to the point of market outlook, we can find that Goldman Sachs strategist has boosted S&P 500 target on strong earnings outlook. Something that has prompted them to take a decision on such analysis and such forecast was also a lower than expected interest rates that has driven this upgrade price target as of certain. So record high on a S&P 500 we may see much higher than we are at right now. In the contrary, what other analysts of other banks are claiming that we are just approaching a possible pullback due to we haven't seen a significant drop in nearly 9 months. So JP Morgan and Bank of America are right now looking for a contrarian sell signal, whereas Goldman Sachs is telling to put some target higher. What's your stance in terms of what analysts are claiming? Are you trying to buy more and accumulate, or rather to get rid of some stocks and take some safer position? Let me know in the comments below. And getting down this crypto outlook, we can find that when recapping latest week in cryptocurrency industry, lots of crypto was on green. So probably one of this catalyst of this crypto industry thriving last week was this Ethereum Hard Fork that we are ongoing right now. So Ethereum has gained during this week 18%, where bigger winners were even Polkadot. Also one of the huge winner was Solana, also Chainlink and Terra Luna that gained over 40%. So talking about Ethereum Hard Fork, we just activated a change called the whole London Hard Fork, and for users it's a big deal because the most important changes on the way to bring this upgrade is burning base fee that users pay to process transactions. This fee will now be removed from circulations in a process known as burning. So it will not really explicitly put a hard cap on Ethereum as Bitcoin has of 21 million. However, it's probably something that will slow the net issuance of Ethereum tokens, and with an increasing demand, Ethereum may be by some people even called a deflationary asset. So another important change for this upgrade to bring is that the block size on Ethereum will now be variable, will not be set as something that is on Bitcoin, where every single block, whatever the demand for transactions is the same. So there will be more flexible. Blocks can now grow and shrink to match the amount of incoming transactions. So it's worth noting that right now we are still on the way to bring some other changes to Ethereum that should put Ethereum in a a more favorable position than it's right now, and there is still some scalable issues regarding this network, and just bear in mind that EIP 1559, so this hard fork, this upgrade that brings this hard fork is just a mile marker of sorts in this transition of Ethereum 2.0. And recent surge in Bitcoin price has coincided with some good news heading towards this crypto industry. This is headline that we have brought up recently. However, it needs some comment as of right now. So JP Morgan pitching a Bitcoin fund to wealthy clients, and with partnership with NYDIG right now is saying that's the safest and cheapest Bitcoin investment vehicle available on the private markets. However, I would like to make the things straightened out. On the one hand, it's something that should bring more attention to crypto industry. On the other hand, otherwise, that pushes Bitcoin investors right into these strict enterprises that are totally useful regarding of how Bitcoin infrastructure works. Bitcoin and most of the cryptocurrencies that are quite of credible in terms of its usage and how it really works, has accustomed us to be a bank to yourself. So instead of putting your cash into somebody else's deposits, no matter how secure it guarantees to be, it's always better to store private keys and to your crypto by yourself, and always know that you are in this true ownership of this type of asset. That's what cryptocurrencies were made for. It's for our independence and freedom from other any centralized entities. And covering up this stream of positive crypto news of recent, crypto community that was rallying against an amendment to the US infrastructure plan that maintains strict reporting requirements for developers and validators while exempting miners, right now is changing their mind and confirming support for minor changes to crypto tax proposal. And this is of high importance because it may bring back this disastrous government decision about purposely collecting names and addresses that may stop surveillance intentions on developers or validators that are keeping these networks going on and working as it's supposed to work. So as someone who cares about cryptocurrency's future, I need to appeal to those who are with political power just to avoid trampling this revolutionary technology in its infancy, as it may just thrive and may also bring some fruits to how the societies work. And no matter how much could I praise Ethereum for its unbelievable growth of recent and some upgrades that really make this asset more interesting, there are some patterns on the stock and crypto market that doesn't really care and are ruthless in terms of what upgrade and what the specification of different assets are. So technical analysis can utilize principles of geometry, parallel channels, ascending triangles, but one of the most important thing that may interest the investor is the technical support and resistance. Right now on the Ethereum chart, we are at the very interesting spot where we are getting to the level of nearly 3,000 USD. So this is very important supply area where price is very often slowing, so the pace of this price movement is slowing down and returning. Technical analysis is all about finding the potential return to achieve the highest results. So on Ethereum chart, we can see that we are just approaching very important from the psychological standpoint a level of nearly 3000 USD. We can also draw a horizontal line that would make a possible resistance for us. More important on whether it's stock market or crypto market is something that an area of supply and demand. Right now, around these levels, we are approaching a very serious supply level. So supply levels are the areas where pace of price movement is highly suggested to be slowed down. But we can find also that this area may become even a return point where we may find the end of a recently building up trend for weeks. This area is also of high significance because we are just have gone through London hard fork that was pushing the price higher. On the stock market and crypto markets, there is a very highly found the pattern where markets are moving up for a specific reason. This time it was this hard fork and selling off just after this event has it happened. So right now we are in a very interesting spot for a possible price reversal. I would just observe here what the price behavior may be, but it's highly possible that we would just bounce from this level and get lower. So I would put this trade of short just at some of these levels when just approaching the funding rates for Ethereum. You can find we are in this positive territory where with some exclusion of FTX where sentiment is remaining a bit bearish. There is no strong appetite for Ethereum right now, but it's still on this bullish trajectory seen by retail investors' eyes. So as a contrarian approach, I find this for a good spot to bet a short position. When putting our trading boat, we can find that would be something like this. So no, the reverse one as we are taking short position. So there will be something like this one. So the stop loss for this trade will be at 3,100 points if we just get much higher, and the possible target for us will be at the middle of this VPVR aggregated volume in this range. So it's 2,330 as it coincides with this recent resistance at the same level. So risk reward ratio is at 2.15, and it's not really bad right now because it's quite comfortable trade when for the cryptocurrency you need some margin when it comes to putting a stop losses, because there are some fake outs that may bring some move higher, but the possibility of profitability of this trade is at high level, and I would just propose to try this by yourself. Just remember about approaching trades very cautiously. In this exactly one example, remember, the more information we have, the less we can process it all. So there's a simple explanation of what may this trade look like. However, always try to do your own research and don't overthink it. And in order to make this trade accurate, just remember, I don't want this price to get any lower or any higher beyond this blue box I've signed. So there is a area of significance where the entrance may be. For me, it's a best spot of right now, and within those limits of price. So if the price abruptly just get much higher or lower, above or below this blue box, I wouldn't consider this as a valid advice in terms of taking a trade, and just let it off. Remember about risk management. And that's it for today's episode. If you have any questions, just put it in the comment section below. Thank you very much for watching, and see you on Monday.